All right, folks, listen, we're going to do one more thing because right now interest rates are getting ready to rise. And a lot of people are talking about what are we going to do when interest rates rise? It makes people nervous because for years we've been told to get the lowest interest rate possible. People need to know that the truth of the matter is the lower the interest rate, the harder it is to pay the loan off early. What did I just say? Not the higher the interest rate, the lower the interest rate, the harder it is to pay the loan off early. So if interest rates are getting ready to rise, listen, don't let that keep you from purchasing or making financial decisions because it can only help you, not hurt you, if you know what interest cancellation is all about and the P.I.L.L method. Oh my goodness. So let me show you a couple of things here. I got a $350,000 mortgage on the screen at 3.5%. And many of you have seen this example. I'm going to go over it slightly here, just first two lines. You see, the principal payment on this loan, the total payment amount is $1,571.66. But the principal payment is $550 in the first month. And the interest payment is $1,020. Look at that. $1,020 in interest on this loan. So, but month number two, the principal payment is $552.43. So here's what we know, that if I make a payment in January and I take a look at February's principal payment, if I had the money, I can prepay this $552.43 early. I can actually pay that money in January. If I did, I'd be paid down to line 2 on this mortgage in January, which means my mortgage payment for February is now on line 3 for the schedule. That means the payment for March moves up one. Payment number 1 is now touching payment number 3. We got rid of payment number 2 for only $552.43 and saved this $1,019.23 in interest we never have to pay. Now, look at what happens when we lower the interest rate from 3.5 to 2.9, okay? Because some people have the interest rates around 2.9, but it could go as high as 3.5. Well, it's not that big a difference in payment, number one, okay? So we got $1,456.80 as opposed to $1,571.66. So that's not a real big concern. But here's the thing. At 2.9% interest rate, look at this. If I want to get rid of payment number 2, it costs $612.44 as opposed to the higher interest rate, and it only cost me $552.43 to get rid of payment number 2. Folks, the lower the interest rate, the higher the principal payment, and you attack the loan with the principal payment. So interest costs you skip don't matter. So this is, well, Don, the interest, well, listen, you give the bank their money back early, you skip a ton of this interest anyway. So interest costs you skip don't matter. Look at the principal payment and control that. Now, here's what I'm not saying. I'm not saying get the lowest interest rate possible. I'm not saying getting the highest interest rate possible. What I am saying is contact the P.I.L.L method at ice10k.com and we will help you to find the right interest rate for your family, for your business, for your church, whatever it is that you borrowed money on. We'll help you to find the right interest rate for you that makes sense for you so that you can control your principal payment and get out of debt cheaper and faster. Now, some of you remember when interest rates were at 12%. I'm going to show you what the loan looked like for all of you people who have been in this room before and have seen what we're talking about. And understand, and you say 12%, that is mind-boggling. I'm going to show you what could have been done if the P.I.L.L method existed at the time interest rates were at 12%. Here's a $100,000 mortgage. It's right on the screen right now at 12% for 30 years. The payment is $1,028.61. Watch this. We're going to go down to payment number 1. Oh my goodness. If we look at it from the bank's perspective, this is crazy money. Only $28.61 went to principal, while $1,000 went to interest. The next month, only $28.90 went to principal, while $999.71 went to interest. Folks, watch this. And please don't ever be afraid of higher interest rates ever again. It's not interest rate that matters, it's interest cost. Watch this. So if we pay in January, payment number 1, the principal payment for payment number 2 or February is only $28.90. You come up with an extra $28.90 in January, you eliminate payment number 2 and $999 in interest you never have to pay. What? If you pay payment number 1 and then give the bank the next 3 principal payments, $28.90, $29.19, $29.48, add all of that up, you knock off 3 payments, less than $100. Less than $100, you knock off 3 payments, and you save nearly $3,000 in interest you never have to pay. So, folks, watch this. If you take a look at cumulative principal and cumulative interest, look at this. All right. So we got to come up with a title for this, Kenyatta. All I can think of is, oh, interest rates are going up. So what? That's the only title I can come up with. So I'm sure you can come up with something catchier than that. But watch this, folks. In 12 months, you would pay this loan down by $362.85, but it would cost you $11,980.47 in interest. If you prepay this $362.85 on line 1, you're paid down to line 12 in 1 month, okay? And you skip all the interest payments between line 2 and line 12. Oh my gosh, you just saved $10,983.78 for giving the bank $362.85 when the interest rate is 12%. Never, ever be afraid of a high interest rate and then try to get a lower interest rate and think you are vastly improving your situation. We can show you at the P.I.L.L method how you can take your high interest rate and make the bank eat it. All right, and save a ton of money and knock out all kinds of interest, save time, save interest, and take that interest savings and put it into building your wealth. Oh my goodness, I was so glad to share this with the folks last night, and we're going to come up with a name for this example, but this is going to be part of our repertoire from now on.
But Don has some valuable information that can contribute to the quality of a person's life, and it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.